Digital Swordsman here. This will be the second video today, March 16, 2022. Just gonna rehash, stuff I talk about quite a bit. It's like, first of all, why I think, as always, being a impatient short-term speculator, semi-investor makes little sense. First of all, this is the gold price, the futures price of gold, for 4 hour chart. Look at these gyrations, the volatility. It's like, here everyone's scared shitless, then it goes up, everybody gets greedy, then gets scared shitless, greedy. It's like, why even play that game? It's like, to me, until this financial system of ours is, gone or resetted in some way, it's like, I have stated, I consider it a gold bull until that day happens, and I started investing in gold and silver miners around here. So I've been long through this entire move. Obviously, that has worked out quite well, and still, it's I think we're starting to see the headlines coming out right now. It's like the global financial system looks to be coming apart at the seams, basically. And you have these, sure, someone dumps a lot of gold. It's a joke. It's picking up pennies in front of a steamroller. Things are just getting worse and worse, and regardless if there's peace in Ukraine tomorrow, the problems are still there, and I don't think they'll be removing sanctions tomorrow if there's or 2 days from now if there's peace tomorrow. So I expect to see more inflation, more shortages. It's gonna just weigh on the consumer, and the consumer is already up to its ears in debt, etc. So it's like, in my opinion, I don't think. There's a bunch of people and newsletter writers or whatever who are calling for a resumed, if you can call it that, bear market around here, and then it goes up, then they get bullish again, and now they're depressed again because of this pullback. And it's like, yeah, you can see how volatile. Right now it looks like we're doing a hammer on the daily. So who knows? Maybe this bottomed. It's like, again, I don't think it's even worth playing that game. And especially if you own gold, you own it for. I don't own precious metals for trading. I own it for the reset, the aftermath of the reset. So it's like, who cares if it's 10% up or down? The things I'm investing in terms of making an actual return on, let's say, the gold and silver will have its peak value when everything collapses against it, while you retain your purchasing power, and every paper asset loses its purchasing power relative to you. So it's not that you necessarily gain so much. It's that most other people lose. It's like in Venezuela, where there were rumors about one being able to buy a house for a gold coin, and a month or 3 months of food for one silver coin. It's simply because everyone else who had the Venezuelan bolivar, their currency, when that became worthless, your purchasing power relative to everyone who just had the paper money went up exponentially. So it's more of a keeping your purchasing power while others see their purchasing power decrease, and by default then your purchasing power goes up because you can overbid everyone else pretty much. And in terms of actually making money or creating wealth in exchange for taking on risk, etc., that's where the mining sector is all about. And at the same time, I'm hedging my gold with miners and hedging my miners with gold and silver, because there's certainly a possibility that physicals will be confiscated again, but I don't see how they're gonna. Every nation is gonna nationalize every gold mine or silver mine, etc. And if they do that, they're probably not going to nationalize the physicals or confiscate them. Anyway, going back to it's like how volatile. I mean, the gold is volatile in itself, but obviously miners are extremely volatile as well. And we're basically just from a few days of miners tipping over again. We're already back to. I mean, back here, I heard all the time. People are afraid it can go lower, can go lower. Then we have this run up. Everybody gets bullish again, and just from a few days of a pullback, already you start to see people panicking or whatever, and again lament the fact that they can go lower. It's like I've been perma bullish since 2015, and I just ramp up the buying the lower the miners go, and that obviously has worked well. And this time is no different. I mean, the tailwinds for gold are even better, and again you see the same thing. I mean, the ones that are worrying about the crash and we're entering a bear market. I mean, I don't care what you call it. If it's a bear or a bull market, if it's cheap, it's cheap. And I would be a lot more worried in the broader stock market indices where it's like nothing is, well, few things are really cheap, and people are warning, well, we might be entering a bear market. I mean, that just tells you right off the bat. Yes, I'm a most people are trend followers. So if it's a bull market, I want to be in it because everything that is gonna go up, and even if it's expensive, I hope it's gonna go up even more. That's not a game I like to play. I like to play the game of just buying cheap when there's almost an impossibility to be overpaying, and then the risk automatically becomes to the upside. Sure, it can take a lot, take a while. Obviously, I mean, this was a 2-year downtrend followed by capitulation selling, and then it went up. And now we've had, I mean, this downtrend is actually even more frustrating because we've had a drop in gold price. So I mean, miners haven't followed gold at all. I mean, if gold, recently was up here, I mean, since gold hit an all-time high, if you actually, look way past it, I mean, gold miners aren't anywhere near their all-time highs, and I wouldn't expect so because a lot of miners destroyed value and diluted their shares, etc. But I mean, in this period of time, I don't think they've had time to destroy that much value or dilute that much. So it's like, okay, if gold is hitting past its peak, it hit around here. I mean, one possibly should expect that miners should be up here. Obviously, they're not. So that's what's makes it even more frustrating because okay, you were even, let's say you had a case or a thesis that gold is going to go up, gold went up, and still your miners didn't go up. So that just makes it more frustrating. But at the same time, of course, it makes the case for juniors exponentially stronger because the price to value gap just keeps increasing. But it's again, it's like you can spot the symptoms. Let's say that everybody who I expect don't really beat the market over the long term. Down here, they're talking about the downside risks, and then they get bullish, etc. I mean, they're again already back to getting a bit bearish after this draft. Like, who cares? I mean, most juniors are so cheap, they should be up 100-200% easy. It's just that there's nobody with capital that's entering, and everybody that almost everybody that has identified how cheap they are, they're already in it. Like myself, I can't buy up every junior for myself, but if someone gave me $1 billion, I sure could make this sector a bit more efficient. It's just mind-boggling. I mean, when you look around and see, trillions and billions being touted in, some sector, some hot IPO, IPOing for 56 billion or whatever, and you're like, wow, even 1 billion in the junior sector could have, the average junior up 200%. So that's the kind of opportunity, and of course, I mean, that's why I don't expect a linear trend. We're at nosebleed undervaluation right now. So imagine if when the time comes that people will actually rush into this sector. I think we're going to see moves we can't really believe now, and I don't expect this kind of trend to. I expect it to one day go exponential, truly exponential. Let's look at some other growth stories. I've talked a lot about SK and Elora, which are very big positions of mine. Goliath is another interesting one. I think it's my second largest position currently. The most fascinating thing with Goliath is that they have almost a bit of a unique, let's say, growth scenario ahead of it. So far, they've drilled these these holes marked in black. 100% hit rate, all hit mineralization. They even drilled a hole 1 kilometer down, dip, hit mineralization as well. I think it was actually one of the best holes. It had multiple intersections, so possibly it can get even better, or maybe it just it's just better because there's a cross-cutting vertical structure here. But regardless, that's kind of unique in itself. 100% hit rate. You don't see that very often. I mean, if you have a low sulfidation system, there's like a zonation maybe 1 to 300 meters high, and I don't know, a kilometer or more in terms of lateral strike. So you would expect many holes to miss mineralization. If it's an orogenic gold system, there's going to be areas where the vein pinches and swells, etc. And you can hit very high grade in one place, move 20 meters away from it, and the gold bearing vein is gone pretty much. That's what makes this so unique, and I don't think the market really appreciates it. Obviously Crescent Capital, Quinton Henney and some others do, because they just had an upsized private placement that closed today of $12 to $13 million, and you don't see that too often. So smart money is well aware of it, and again, most smart money can't buy their positions in the open market, so that kind of in institutional interest gets shown in the private placements. So what makes Goliath so unique and why I like it? Just to summarize, it seems to be a almost uniquely homogeneous system, that there's the mineralization seems to be based on 100% hit rate so far, that it's actually might be in place all over this zone. Okay, that would suggest that these holes here have an abnormally high chance of actually hitting something. Okay, and it's a abnormally large target as well. Quinton, in a metals investor presentation, I think it was uploaded today, he mentioned that a crude estimate of the lateral potential here, let's say planar potential, maybe you can call it, is around let's say 1.5 million square meters. And then they have the new extension target, which they discovered this last field season. And he just mentioned that maybe it has the same potential as the sherbet zone. Maybe it's actually was part of the sherbet zone and then was downdropped or something due to this northeast fault here, let's say. So maybe this was a homogeneous sheet. And we should expect the same stuff here as we do here. In that case, let's say this is even half that potential with the given footprint. So if we do some math on what we know so far, that the average mineralization in all these holes is around 5.8 meters thick. Grades 6.3 AU equivalent grams per ton. Okay, that's like 35 gram meters right off the bat, more than that. That's great. Underground mining, thick, high grade. Okay, if we take 1.5 million square meters and use this average thickness, this average grade let's have a specific gravity of 2.7. I don't remember if it should actually be 2.8, which would be better. But anyway, then we have a theoretical blue sky target of this area here at 4.8 million ounces. And okay, it's probably in the presentation, but I mean, this is still, there's nothing saying that this has to stop at this line. So it might actually, go past this. And there are some slides that shows it, broadening out. So it basically, I mean, imagine if it keeps continuing and it gets even broader. But anyway, we don't need to be too hyperbolic. But that's a 4.8 million ounce AU equivalent target. And if we use half that blue sky for the new extension target, that's 2.5 million ounces AU equivalent. So the total blue sky, again, theoretical potential here is 7.1 million ounces equivalent, assuming these assumptions. That would be one of the largest underground high-grade mines in British Columbia. And I can only imagine what a deposit of this size would fetch in terms of how valuable it would be, given that the majors seem to be flocking into British Columbia. And I'm assuming that given the recent geopolitical tensions out there, that safer jurisdictions, let's say, have gone up in attractiveness even. Okay. So I mean, just think about it. It's like, okay, let's say, it would fetch 150 million per ounce. I mean, that's about 1 billion in value. And the interesting thing is that these are the planned holes just for this drill campaign, this field season. So I mean, imagine if they keep on having close to 100% hit rate, and they hit on most of these, and the grades and thicknesses, is there, like we've seen the average be, then you would pretty much, or at least if all these hit, you could pretty much infer a multi-million ounce, maybe up to 4.8 million ounces AU equivalent target from one drill campaign. And if they hit the new extension target, one could, say, well, okay, that's probably at least, let's say half of this, because it won't have the exact same coverage as the shorebed zone. But okay, if they hit, then maybe there's a very good likelihood that there's 2.4 million ounces. So maybe one should put it at a, 30-50% chance of it actually being half as good as the shorebed zone at least. And that's probably also, open. And we don't know about maybe the vertical structures actually add some value as well. They're not the main focus, it doesn't seem to be, but you can look here that this drill hole will probably cut through this, I think it's called a real deal structure, these three holes, this hole, this hole, this hole, this hole, this hole. So maybe we'll actually have an inferred potential from a vertical standpoint as well. So it might actually, be more than just a sheet like shorebed, more horizontal sheet like shorebed zone. So maybe this actually might get increased. So I guess the main point is that this will be one of the highest impact drill campaigns of any junior that I know of, because I don't know a single junior out there, I think, especially, in BC high grade, that can put out one drill campaign this year and infer up to, theoretically show, let's say a probable blue sky of like 5 to 7 million ounces of high grade gold. So just imagine, I don't expect them to release all the holes in one go like they did with most of the holes from the last field season, but just imagine that, okay, I don't know what the actual market cap is right now for Goliath. Let's say 60 million after the race. What could happen if you go from market cap of 60 million You hold it going into the assay results, and let's say all these holes here show similar grades and widths, like all the holes that has been drilled so far. Again, you would immediately jump to have an inferred system that's one of the largest in all of, it's, at least underground high grade, one of the largest in Canada, pretty much. That's an obscene quantum leap from where they are now. Most companies won't even be able to drill up, let's say, 1 million ounces on one field season, especially a junior. So this makes Goliath almost a unique case from an exploration bang for the buck standpoint, and I'm quite loaded with Goliath, and that also opens up the potential that, I mean, for anyone who likes to have, in this kind of sentiment environment, there are not many plays out there that are exciting enough that you can play the what I like to call the drill hype trade, where you basically buy something that you know is gonna get drilled, and when when a company starts drilling, the hot money is gonna enter. The hot money is not even in this sector right now, really. But this is such a unique, high impact drill campaign that I think there are more and more people aware of it, and obviously the ones who entered big time in the private placement, would probably talk around and people follow them. So I think Goliath, you could actually have, depending on your appetite for risk, I think we're gonna see possibly a double from here, just going into pre-assay results, simply because the market and more people will figure out that Goliath could quadruple in value from just this drill campaign. And again, given that so far they've had a 100% hit rate, showed that the mineralization extends 1 kilometer away or down dip, that makes it one of the most probable drill campaigns out there in terms of immediately doing a quantum leap. If we didn't have this hole down here that hit good grades over multiple intercepts, it would be a lot more risky. So I mean, I know people like, you can't project whatever. It's like people are risk off overall. But if there was one case you could allow yourself to actually project quite a bit without being overly hyperbolic, it would be a case where they've hit mineralization in 100% of the holes and have a 1 kilometer step out hole that also hit. So just to wrap up, I think, I haven't decided yet how I'm gonna play it. I mean, I'll for sure ride, I think, my entire position for a double from here. But at the same time, I might even, if I get dry powder, I might even actually add, just to ride the drill hype that I think is coming. Let's say I add on 20% on top of the main position, and I take that money off the table if we go into a drill hype. It's like, I'm not saying everything of this will happen. I'm just again trying to make people learn how to fish themselves, because I think it really makes sense when you think about it, what I've been been discussing now. So just keep an eye on this story if nothing else. And again, I think this will be one of the juniors out there that even in a poor sentiment environment can actually produce low risk drill hype returns, if nothing else, simply because this is one of the most unique bang for the buck drill campaigns that any junior will have. Then we have Grande Portage, ticker GPG.V, also a holding of mine, also a sponsor. This is a kind of interesting case, and it just goes to show that it pays to read every news release, and especially in my opinion the comments, etc., because it's the context that often I think is more valuable than the actual results, let's say. And because when I first looked at the news, just scanned the headlines, like, yeah, great intercept, obviously. That's over 150 gram meter intercept. And it's like, okay, intervals, high grade but skinny, low grade, skinny, high grade skinny, high grade skinny. They already have 1 million ounces of 10 grams per ton or something like that. So it's one of the, I think, most high quality 1 million ounce deposits out there. So it's already a high quality story. But I must say I did expect more from these drill holes. But of course that also goes to show that these load gold systems are very nuggety. And these are from multiple targets, so it's like they have a lot of room to they have a lot of room to grow, obviously, and if they don't need too many of these kind of intercepts. But the interesting part is that, okay, it didn't really sell off, and even in this poor market environment, I would just assume so, especially since Grande Portage had been doing quite well. But then it's like, when you read this whole 21Q for which analysis are not yet received and will be discussed in more detail in future releases, discovered an unexpected mineralized zone in the Sleeping Giant projection, which was far wider and more quartz-rich than anything previously encountered in the Herbert system. The variable sheared altered and quartz vein intercept is nearly 45 meters wide, and is open laterally and to depth, and contains several visible gold showings. Okay, 45 meter thick quartz veined intercept with visible gold. We don't know the results yet, but obviously this is like the biggest thing, I think, in the entire news release. And it's kind of interesting. It was it was found in the bottom. So if you're lazy like most, you don't even read through it. You look at the headline, maybe you buy because of that, or maybe you sell because, well, there weren't even more bonanza grades or whatever. But I mean, this is potentially a game changer. Obviously, maybe I don't know what this is, but it's visible gold, 45 meters wide, unexpected mineralized zone. Who knows what this might turn out to be? This might be a complete game changer. I mean, they already have 1 million ounces of high grade. If they found 1 million more ounces of high grade, that's a 2 million ounce high grade deposit. It's like that would make Grande Portage very cheap right now. Especially, I mean, it's in Alaska. It's near to historic mines, etc. Main point: keep an eye on Grande Portage, and if you don't like, I'm gonna ride into the whatever this is because I don't like selling it, and I don't like selling anything right now, and I'll take that gamble because whatever this is, it can take away the fact that they already have 1 million ounces of high 10 grams per ton, and that's also what's really interesting is if you look at a chart, this looks really primed. One could say, yeah, it's a, let's say ascending triangle. Maybe it's a cup and handle in the blue here. But fact remains that this is getting very, very coiled, obviously. So this is going to pick a direction soon. And you can only imagine if you had a consolidation from, I'm not sure, maybe it's like, sometimes it was a different company or whatever, but it appears that it was, let's say it was Grande Portage. Either way, this is a fat consolidation pattern going back to 2017. So that's a multi-year consolidation pattern, like, the saying goes, the bigger the base, the higher in space. So what if we're nearing the end of this consolidation pattern here? What if this section here proves to be a game changer? Obviously that would break up, and that would be a huge breakup. So I don't know how that's gonna provide rocket fuel. Obviously it's still whatever. It's like I don't necessarily love assay specs. You know, one single news release, hunting one news release. But they still have 1 million ounces of high grade gold. They get plenty of veins to go after. So it's not like the case would die if this didn't turn out to be as good as it sounds like. But if it turns out to be as good as it sounds like, I think that this could put Grande Portage in a whole different trajectory. Maybe the implied value all of a sudden jumps here, and the instead of growth trend being like this, maybe it shoots up to like that. Burin Gold as another sleeper. Again, juniors are unloved right now, so there's not many people paying attention. But they have rushed assays. They're expected to reach us in or be out in later this month. When you rush assays, typically that's because you see something you really like, and given the market cap, 15 million, I think they got they're pretty good on cash as well, and they have new gold as a backer. Good people involved as well, ex Marathon Gold, I think, if I remember correctly. One to keep an eye on. If maybe they hit the best intercepts yet or whatever. So this could be a real grower in the future, and it's in Newfoundland, so it's like I would expect ounces there to be highly valued, and they have a long pipeline for growth because they have they have multi-kilometer trends already lined up. Okay, just touch again on Timberline, just since we're on the topic of growth companies. Like I recently stated, and you probably saw the news release when they came out with massive assays. They put out I don't have it listed here, but they put out a 40 meter intercept here of 5 grams per ton. Actually that was down here, I think, somewhere around here. And this hole here hit 22.9 meters of 6.11 grams per ton, and that's still open, so it might get thicker than that. And they're drilling the Oswego target right now. This was a game changer in my opinion when they did the core holes. The story completely changed in my opinion. And you can see the thing I showed there, this target, that just covers this area. And you have these multi-kilometer trends of high geochem for gold, AU, parts per billion in soils. And if you listen to Quinton's latest talk on Timberline in the Crescat presentation, weekly Crescat presentation, he basically suggested that this Eureka district will be has the potential to become one of the hottest areas in the future. So you can only imagine if let's say you can fit 500,000 ounces of high grade gold in this area. I mean, how much more is there to explore here? So I think the growth trend for Timberline, first of all, the overall implied value of Timberline jumped up, and the market actually in this case started to figure that out and has actually revalued. But I also think, given that they have caught the tail of something that looks to be thick and very high grade, or very thick and high grade, I think the growth trajectory also, I mean, the implied value of the company jumped, but I also think the growth trajectory is going higher right now, because obviously now we're looking at probable growth, because that's a 400 or 500 meter distance between those thick high grade intercepts. So I think we will have a high probability of more such intercepts in the coming drill campaigns, and jury's still out on Oswego, but fact remains they could probably be drilling here for years, and this could really become a multi-million ounce system in the heart of the Battle Mountain Eureka trend. I mean, most of these companies I've talked about, I mean, they have, they either had a material news release that changed the case, or in the case of Goliath and Grande Portage might be putting that out shortly, or at least before the field season is out. And what I like about, since I'm a buy and hold kind of guy, typically I like long-term cases. And if you look at GDX, sure, it's, it has had an uptrend, but it's like you can't typically beat the growth juniors. That's why I don't like trading sardines. I want to have long runways for growth, which you can see in this picture, where growth is worth as much as possible. Obviously, in Nevada, it would be worth quite a lot. Same for Goliath and Grande Portage and Burin Gold, because they're all tier 1 jurisdictions. And yeah, a lot of bang for the buck on the drilling. So I mean, if Timberline keeps on hitting those kind of intercepts, I mean, each hole, if they keep getting 200 gram meter holes, etc., that's a lot of bang for the buck. So obviously, I've shown this before, this looks like a huge reverse head and shoulders. So again, I think Timberline could grow for years to come. So hopefully I can do what I've done in Eloro and SK and Newfound Gold, etc. Sit on my ass and come back, and don't and just come back to a good profit in ever increasing profit in the next 6, 12, 18, 24 months. Whereas most people try to guess where the next weekly or monthly direction is. I much rather stick with probable growth, a lot of bang for the buck, and yeah, and hopefully, I mean, if some of these really work out, I mean, they're going to become 5 to 10 baggers in 2-3 years. So they're going to pay for a lot of similar growth stories that don't pan out. But the thing is obviously to hold them long enough for that to play out. Because if you just trade, let's say Goliath or whatever, it's like, I'm in it for the news release. Then the results disappoint or whatever. You sell out here, and now I'm back again here. And then it goes down and I sell out. You make nothing. You probably lose money. But if you sit on your ass, let the case play out, and you have a long-term horizon, 12 to 24 months. If this is the base case, maybe the stock will actually be up here. Maybe it will be down here. Fact remains, or point remains, that even if you have a blue sky of like here in a given time frame, if it misses by, I don't know, a lot, maybe again ends up being here, and then you will still have a profit. So it's like, I think that's the way to, again, really play this market. Play on growth. Play on the companies that will put out news releases that overshadow what gold is doing and what the miners overall is doing. And of course, you will have periods where they don't get much rewarded for it. But I can tell you that I think market can be pretty sour. And if Goliath hits on the majority of these drill holes, there's no way that unless the world has gone up in smoke, that Goliath won't be a lot higher valued. Yeah, thanks for listening. Obviously, consider me biased, and if I mean, this is just, I'm just talking what I'm doing, what I think makes the most sense. If you actually want to beat the market, and you might not agree with it, and then you should do what you feel comfortable with. Consider me biased, because I think every company I talked about is a sponsor as well. So yeah, thanks for listening. Subscribe if you like what you hear.